I was just going to say, like, one of the most basic things that I would say 95% of the population does not understand is how much houses actually cost. Like, if you had a mortgage for $500,000, people don't really realize that only the payments you make, only a portion of that actually goes into the $500,000 principal payment. The rest of it, half of it, if not more, is just an interest that goes to the bank for lending you fake pieces of paper.
Yeah.
So if you had a $500,000 mortgage, you probably end up paying $1 million or 1.1 or $1.2 million for that house with your principal and your interest after the 30 years is up. And I think it's one of the biggest scams in history, other than, let's say, income taxes, but it's right up there. People are just, you see the house, the price of it, but at the end of it, you end up paying more than double for that house with interest included in that.
Yeah. And that's the financialization of housing, right? This is in Canada, it's a huge business, right? If you look at the top 10 companies in Canada, all five of the major banks are near the top. And that's because they deal so much with Canadian real estate. There's so much financialization of even the repackaging of mortgages and lending them out, like all that happened in 2008. None of that stopped. Like the mortgage-backed securities, that's all still out there, and all of that facilitates basically financial income for all of these major institutions, and all of that ends up being tax receipts for the government. So the government has an incentive to keep real estate inflating, and all of it is just tied into this terrible fiat system that uses real estate as an investment. None of us are arguing that real estate is worthless. It's worth something. It just needs to trend towards its utility value. And I think the world would be much better off because if that happens. And we could use something like Bitcoin that doesn't affect any other people's like cost of living. There's no direct effect. Nobody lives in their Bitcoin. So if we use something like that as a savings tool, as an investment, then we wouldn't need to raise the cost of all of these other things that have monetary premiums over them.
Yeah. And okay, so I wanted to show this here. And I know a lot of people probably haven't looked at a compound interest calculator before, but what this shows you is if you borrow a certain amount of money, how much interest you're paying on that money, and then how much your payments are going to be every month. So let's say, for example, you buy a $625,000 house, you put down 20%, you're going to be paying 6.62%. This is the current interest rate in the US. So over 30 years, you borrowed 500K, you paid the bank 651K.
Cool.
So people might say, "Oh, it's good because it can be rented," but the bank at the end of the day, the bank gets $651,000. It doesn't matter how they get it, whether you work for it or somebody else works for it. If you work for it, you're going to notice the pain of having to earn that $3,200. But if you have a tenant, you're not going to give a shit about them. You don't care about them because all you see is the paycheck. All you see is that the money is coming in. That's all you care about. But at some point, somebody has to work to make that money. Whether it's your tenant or it's you, somebody has to work for that money and the bank benefits from it. So that's why this massive push is being made to buy real estate. That's why for the last 50 years, more and more people are buying real estate. People will continue wanting to buy real estate. And I did a little bit of research on the returns on real estate, and the returns are actually a lot lower than people think. I don't know where the link here is. I think I might have closed it, but the returns on real estate are around 3 to 5%. So if you're borrowing 20, if you put 20% down and you borrow 80%, let's say your return is 3%. Your actual return will be 15% because you're multiplying it by 5. So your actual return will be 15%. You're putting in so much time, so much effort,
Yes.
so much. You're putting in all of this, and plus you have to still pay this interest. You still have to pay for maintenance. You still have to pay for realtor fees. You still have to pay for lawyers. You still have to pay for appraisals. You have to pay for loan initiation fees. You have to pay for all of that. And that's not included in that 3 to 5% is gross. So after you subtract all of that, what's your return really going to be? Is it going to be 5%, 6%, 7%. Of course, at some point you have a paid off house, but in terms of Bitcoin, the value of that house is going to be much, much, much less than what it's worth today. So let's say you have a house worth 5 Bitcoin today. At some point, that house is going to be worth 0.1 Bitcoin. And I think that could happen within the next 20 years.
Yeah, a couple of things I would say on that, because I sold my rental house to buy Bitcoin in 2021. And that was one of the main reasons, is because, it's a pain in the ass, number one. But if you look at your income statement from your real estate, the return on that, when you're trying to figure out how much of if it's a good investment or not, I feel like most people don't actually include their own time in that calculation, because it's not like an actual payment like a salary would be for a business. You spend a lot of time finding tenants, going through applications, fixing things, changing the carpet or the flooring, whatever that may be. You put a lot of time into that, and that's not included in that return. Most people don't factor their own time into that either, so it would actually be much less than that return. And so, yeah, it didn't make a whole lot of sense to me. Plus, the other thing for me was that even if you managed to get like a 4 or 5, 6% return on your real estate, okay, well, wait 15 or 20 years when you have to dump that into a new roof, and all of a sudden that's completely wiped out.
Yeah.
Or the
And
water
you
heater blows one
have to have the
weekend and you
cash
got
on the
to
side too.
right,
Yeah.
exactly.
You're forced to. Like you can't get away with not having cash on the side. I've had a friend who had one property that, like you said, he had some issues with it and he lost 40 grand. And he basically had to, his situation got so bad that he almost had to, he had to claim bankruptcy because of this rental property that he had a tenant in who didn't want to pay. And it just got worse and worse. And he had to go to court. He had to pay for lawyer fees and everything. And of course, he didn't get anything out of the tenant because the tenant was broke.
Yep.
Yes, exactly. And so that's from a tenant's perspective. But the other part too here that I want to mention is because from the bank's perspective too, this is, I know the banks love real estate because they get a nice return on it. But if the housing market ever goes south, which it probably will, we've seen a lot of volatility in the real estate market through the years. But if if you can't make your mortgage payments, if your tenants move out, as Rajat suggested there, or they just stop paying you, you still have to come up with that cash. And if you don't have that cash, you're going to default on your mortgage. And at that point, the bank has to step in and find a buyer for that house, which is also a huge headache for them. That's why Bitcoin not only is a better investment from our standpoint, but that's why it's going to become pristine capital collateral from the bank's perspective. Because if you stop making your mortgage payments, the bank just starts selling some of your Bitcoin. They can do that in 5 minutes to any person on the planet. And that is such a huge shift in this whole paradigm thing here.
Yeah. And somebody said the only person that doesn't lose in this situation is the bank 100%. The bank is the only one that truly benefits, because even as a tenant, even as a landlord, you get cash flow, but think about the headache that you're going through. So you are getting wrecked. But keep in mind, I'm not talking about residential homes. Like I'm not talking about your
Right.
primary residence. I'm talking about rental properties. Having having your own home is, of course, going to be better for you because it gives you the stability. You get to take advantage of that mortgage, right?
Mm-hmm.
Somebody said here you get to buy a house with somebody else's money. Even that, I mean, that's a wealth transfer. It's a transfer of wealth from the person who doesn't understand the financial system to somebody who does. So when BlackRock is buying as many houses as they can, they're borrowing as much money as they can to buy those houses. They're getting basically free loans. That's a wealth transfer from us, the people who are basically depositing our money at the banks, and then the banks are giving that loan to BlackRock. That's a wealth transfer from us to BlackRock. That's what the real estate market is dependent on. It relies on that. It is built on that. It's built on making one group of people, a small group of people, very wealthy while everybody else suffers.
Mm-hmm. The other thing here too, like you mentioned, the banks being able to profit from this and sort of win from this agreement, they don't have any real cost of capital. It's not like they actually really had to come up with the money for you to lend to you for you to buy the house. They just spin that out of thin air. It costs them absolutely nothing except the mortgage lender's salary, and to keep the lights on and everything like that. But that is money that is just created out of thin air, and they earn a certain rate off of you, and it costs them absolutely nothing, which goes to, and that's part of the debasement of currency as well. It's a completely unfair system that banks totally get an advantage from being so close to the money printer, deciding who gets credit creation and who doesn't. It's just totally messed up.
Yeah. And then on top of that, there are other issues where I saw on here somebody said most tenants won't respect your property. They don't care if they make a hole in the wall, right?
Hmm.
You took their deposit, and if their deposit doesn't cover that
Yeah.
damage that they caused, how are you going to sue them, right? What if they have no income? What if they don't have a job? What if they lose their job? What are you going to do? Um, make them your slave or something, right? What else are you going to do? There's nothing else that you can do at that point, right? You're
Tax
basically
them.
you're screwed, right? Yeah, like what are you gonna do? Put them in your basement or something like that? But in that case, I mean, you're just basically running like you're just running like a sweatshop in your basement because that's what you have to resort to. And then
Yeah.
people also say, oh, you can borrow against your house. What if the bank doesn't lend you against your house? The you're relying on the bank to do everything. You're trusting the bank. You're trusting that the system that works today is going to continue working later on. What if it doesn't? There's all these things that you're making. This is why I think that real estate is speculation.
Oh yeah. Oh, big time.
It's complete speculation.
100%. Yeah.
Yeah, that's a crazy thing to me is like people think that their houses are going up in value. If you actually looked at the charts, the average returns or increases in prices, it's pretty much identical to the amount of money that's been printed since that time. Like it's not above it. It might even be below it.
It is below it.
It's below
Yeah.
it? Yeah. I mean,
Yeah.
that's the crazy thing is like people think that their house is going up in value when they've literally done no work to it. It's probably in shittier condition than it was when they bought it. And
Yeah.
their neighborhood hasn't changed at all. But for some reason, it's just gone up in value. And you might say, yes, there's more immigrants coming into the country. Partially, there's more demand for housing. But at the same time, there's a ton of real estate going up. In every city you drive through, there's condos, all these new developments of just condos stacked up to the sky. And you have to remember that. That's part of the real estate. The key here is that they can just create more of it. You just compare it to things that they can create more of if there's demand and things they can't create more of if there's that same demand. And it's Bitcoin and then there's everything else.
Yeah, so you definitely don't want to be the last one out, right? It's like a bubble. It's like a Ponzi scheme. It's if there ends up being an equilibrium where there's actually too much housing, what does that do, right? That creates
Exactly.
a huge problem for anybody that's been treating it as an investment. You're not going to have that problem with Bitcoin. It just Bitcoin, when there's too many sellers, it does go down, but it gets the system just gets worked out so fast compared to real estate, which can just have this cascading effect.
Because it's
And
global, right? It's
yes,
not local. It's global.
it's liquid too, so you can sell it, you can buy it immediately. With real estate, you just have to guess what the value is basically from other things that have been sold. You hope to sell it quickly. You pay realtor fees. I mean, it's just brutal. I mean, yeah, it's totally not worth investing in my opinion. I agree with you guys both that it's worth owning your own home for your own like sovereignty and feeling of, being able to build your home and all that, but as an investment, it's just a nightmare in my opinion.
I also
Yeah.
don't think that people should just be buying houses either because you have to factor in everything. And a big part of it, especially here in Canada, is the property transfer tax, I believe. It's like a pretty significant amount. Like it ends up being like 5 or 6 thousand on like an average house. So if you're not going to be in your house for like the next 10 years, you're going to waste money on that
Oh yeah.
property transfer tax right off
The
the hop.
land transfer
Land
tax.
transfer, that's what it
Mhm.
is. What a
So
scam
bullshit.
that is.
It's so all they're doing is updating something in their books, and they're charging you like 1% of the property
It's
value. That's
nuts.
crazy.
Yeah.
That's a way to isn't that technically a way to make real estate less liquid so that people don't actually see so that there's really no um what is it called? Price discovery?
It would definitely make it less liquid because people are less likely to sell it if they just paid
Right.
6 grand for this transfer tax 2 months ago.
So they're
Yeah,
forced to hold for a few years. And then on top of this,
definitely.
so a lot of people keep saying, "Oh, real estate is there's a shortage of housing. There's a shortage of housing." There's no shortage of housing. There's absolutely no shortage of housing. People just buy more houses because they see them as a savings account.
Yeah.
Yeah.
We can build more houses if we want to. This is from a website that's about home ownership. Millions of houses are sitting vacant. So what's happening here is people are buying. So we can see here,
9% of
recreation.
homes.
Yeah, 9%
Whoa.
considered vacant. So 9% are considered vacant. Of course, a lot of them are probably like in escrow, for example. Maybe
Sure.
somebody's trying to sell it and they've moved out to stage the property. There's properties that you can't live in. They're damaged beyond repair. But then there are also recreational properties,
Hmm.
seasonal properties. People are buying these properties because they want to go them at some point.
Right.
Right? Maybe they'll go there when let's say you're Canadian and you're a what's it called? A snowbird? Something like that. But basically
Yep.
you go to Florida when it snows here and then you live there for 6 months and then you come back.
Just like the geese.
Right. How many of those people, when they figure out how Bitcoin works, would rather sell that house, buy Bitcoin, and then rent whenever they want to go anywhere in the world? So instead of going to the same destination over and over again, maybe they can go to Thailand, maybe they can go to Japan, maybe they can go to anywhere in the world.
It's
Yeah.
going to
How
happen.
is
We're just at the point now where
exactly?
people don't understand Bitcoin.
And
Yeah.
a lot of those people are retired. A lot of those people are already retired. They already have their income set aside. Eventually, they're going to pass away. They're going to okay. So let's create a scenario here. So let's say your parents passed you a rental house. Would you sell it or would you keep it?
I would
I'd sell
sell
it
it.
for Bitcoin
I would
I'd
sell it
sell it, yeah.
immediately.
As soon,
immediately.
I'd probably get them to sell it before it even got to that point.
Right. And
Yeah.
I think that's going to happen. And that's going to break everything. That's going to break everything. That's going
There's a
to completely it's going to destroy the entire housing market. It's going to completely change how much interest we pay on houses. I think that cap rates right now are way too low. So what I mean by cap rates is basically the discount rate on houses. It's like people look at it as like 4, 5, 6%. I think it should be like 20, 30% because of the risk that you're taking with housing.
right. Yeah. Yeah. One thing I've been thinking about with the housing market is just generational change, like we kind of alluded to. There's a lot of boomers retiring, might be passing away at different times. They acquired very large houses, had large families. Millennials, Zoomers, even Gen X, there was a big shift in the way that what generations have been doing. Lot smaller families, a lot of different preference for dwellings. So with that, right, we talked about housing not being um, a fungible thing. Each house is unique, so each thing should be valued differently. If there's all these houses that nobody really wants because of the style, because of the size, because of all the other things that go into a house, then those either need to be torn down, which makes them a lot less valuable, or when they're bought, they're not desired, so again, less valuable. And a lot of that's going to get passed on, and a lot of people are going to try to just get rid of these things. I feel like there's going to be less want and need for owning homes, especially rental homes. And I think even even owning homes for yourself as well. I think that will shift, and generational shifts happen. It takes time for that because a lot of that happens with generations passing. But yeah, there's a lot of change each generation that passes. And
Yeah.
it's shifting towards Bitcoin. We can see this trend. We can visually see this trend. Every chart we look at, it's all shifting to Bitcoin. It's the
It
clear winner.
I think the key here is that it's not shifting to some random shitcoin. It's shifting
Yeah,
to BTC.
100%. The market has chosen. The network effect in money is extremely strong. People don't realize how strong the market effect or the network effect of money is. It's not like other things where there can be a duopoly and all of this. If Bitcoin is the most scarce, the most sought after, and there's the ability to do layer twos that are still peer to peer, and we don't need to broadcast every single transaction we have. In fact, we probably don't want to. we might want some privacy with our transactions. So large, secure purchases, yeah, we want that validated on chain. Small, me shopping at a coffee shop or whatever, I'm fine to do that peer to peer in a Lightning channel. It's very easy to do, and it's just going to get better and easier to do as the technology develops further and further.
Yeah, and